All right, hey guys, Mike Mills with Verity Mortgage here today. This is my good friend, Brad Bingham. He is an agent for Allstate Insurance here locally, and he lives in Mansfield, actually has an office in Arlington. And Brad and I have been buddies for a very long time. Our kids actually played sports together from the time they were probably 3 or 4 years old, all the way up till, recently, really. Now that they're in 6th grade, we're playing basketball together this year. So this will finally be our last year to coach and be involved in all this stuff. The boys are moving on, so
big hoorah.
I'm quite excited about that. But I wanted to ask Brad in today because when it comes to insurance, Brad's one of my go-to guys that, if I have questions about stuff or if I need help with anybody that's kind of working through some issues, he's a guy I call simply because more than anything, obviously we're friends and we've known each other for a long time, but really and truly, Brad is great about answering questions and helping explain what someone's going through when they're dealing with insurance premiums and claims and all that kind of stuff. He does a really great job helping people understand kind of, what to look for, what all this, sorting through all this insurance stuff. Because honestly, and I'm the same way, most people, when they think about insurance, it's like, it makes me want to go to sleep. Like, I'm not real fired up about it, okay? But this is what Brad does every day, and he understands it better than most. And so, I use him as a resource often, and I thought it'd be good to kind of have him come on here and explain a few things in his own words, kind of what you need to look for, especially when it comes to homeowners insurance. That's what we'll primarily be talking about. What premiums are based on, why there's differences in different kinds of premiums, what the cost is primarily based in, and when you actually have claims, like what it is you need to kind of watch out for when you actually need to make a claim on your house. So even though, insurance sometimes can be something that nobody wants to talk about until you need it, right? Nobody wants to discuss it until it becomes a problem. And so
the old doctor attorney.
That's right. That's right. You never want to speak to them until you know. So anyway, but first, just like I always start everything out, Brad, tell us a little bit about, I joke all the time because every single person I run into either went to high school, junior high, or, church or something with Brad. Like Brad knows everybody in the immediate Arlington, Mansfield area. So tell us a little bit about kind of where you came from, how you started, all that kind of stuff.
So once again, my name is Brad Bingham. I've been with Allstate for about 22 years. I was born and raised in Arlington, went to Dunn Elementary, Bailey Junior High, and Arlington High School. So right in the heart of Arlington. My office is still right there by Bailey Junior High, so I'm in my old stomping grounds.
I wore my Arlington Stadium shirt for you, just the old school, bring it back.
There you go. So, I know my surroundings, I know my area. I do know a lot of people in the area, just from the people that have grown up here. So, to me, that's a benefit.
Yeah.
If you can help your customers when they need something, I need a roof, or I need an electrician, I need a plumber. It's always good to be there. You want your customers to come to you when they need something, right. And you don't want them to call an 800 number. You don't want them to call somebody else. You want to be first in mind.
Right.
So I pride myself in being able to help people through the process, whether it's buying an insurance policy or a claim. Maybe they even have a different insurance carrier. They're not even my customer, but they need questions and they don't have anybody to go to. I like to be that person.
Right. So how did you get into insurance to begin with? Like, how did that even start?
Well, so actually I played baseball through college for 2 years, got into the golf business, was working at the Four Seasons. And my dad came to me when I was about to finish college and said, "What are you going to do for life?" And I said, "Well, I'm going to play golf." And he goes, "Well, do you want to make money or do you want to play golf?" And I said, "Well, I'd like to do both." And he goes, "That doesn't happen."
Right.
So,
or rare. It's
right.
Yeah.
So Dad happened to be an Allstate agent, and he asked me if I'd be interested to get in the business. So I went to a class with no book, no preparation, nothing, and went and took a test and I failed. So I realized real quick that this was going to be a little bit tougher than just, getting through college.
Right.
So studied a little bit harder, went and passed my test, went to work for Dad, worked for him for about 7 years, and then went through a process of purchasing the agency from him. And so from there, we've grown it from about a $4 million book to about a $8.5 million book. So I've been somewhat successful, been doing it for 22 years. And, people ask me all the time, how are you successful? And I just said it's persistency, right?
Yeah.
You take care of people. You don't worry about every penny that you make. It will always come back.
Sure.
Once you take care of people, your business will take care of you. That's what Dad always taught me. And so that's how I got into business.
Well, and that's, again, he just said one of the main reasons that I refer a lot of people to Brad is simply because he has the same mentality to some extent that I do, which is just, treat people well, be nice to them, answer their questions, help them out as much as you can. And the business kind of takes care of itself, right? You don't have to go out there and pedal every single day. And, you run into people and you have respect for them and you help them out when you're available to help them out and give them direction on different stuff. The business kind of comes on its own. It's organic. You don't have to push for it. Right?
I tell people all the time, I can't control a lot of things. I can't control rates.
Right.
I can't control what adjuster you get.
Right.
But what I can control is how I treat people and how my staff treats people. Yeah. I have some of the best staff, I think, in the industry. And to me, that's key. If I have a good staff, I'm going to have a good agency.
Right. So, okay, speaking of I can't control rates. So I think, and I talk to people about this a lot whenever we talk about, payments and stuff about insurance specifically, but what is it when you look at an insurance premium in general, especially when it comes to homes, okay? What would you say, makes up, like how is that premium determined? What's the biggest factor in determining what the premium is?
Well, there's two aspects to it. One is the insured, right? They want to see a responsible person. So that comes down to your credit.
Right. So credit matters these days.
Always, everything. Yep. So it comes down to your credit. It comes down to how you handle your daily business, and they have scoring systems that will score a individual. Right. And then it comes down to the characteristics of your property that you're purchasing or you're refinancing or whatever it may be. How old is the property? And a 1901 property is going to be more expensive to insure than a 2021 property.
Right.
The age of the roof is a big factor. The condition of the roof. If you have a brick home, it's going to be cheaper than a frame home. A frame home is more susceptible to a fire compared to a brick home. So if you have a fire at the house, your fire department's 5 minutes down the road, you have a frame home, you're going to have a lot more damage than you would with a brick home. Right. So the characteristics of the home and then also the stability of the borrower are going to make a big difference.
Okay. So, and has that always been, I know the credit piece of it, obviously as lending, this is something that we obviously deal with, but I seem to remember it wasn't always a piece, was it?
It wasn't. I would say, so I got in the business in 99. And I would say credit factored in probably in the early to mid 2000s is really when it started to be a heavy factor.
Right.
When I first got in the business, it was just clean or acceptable or unacceptable.
Right.
And now they have a scoring system where every company's going to tier you based off of that responsibility factor. And so, although it does relate to your credit, it also relates to your responsibility.
Right.
And so somebody who does pay their bills on a timely manner, it doesn't matter if you make $50,000 a year or $500,000 a year. If you don't pay your bills on time, it's gonna affect it. So
because it's a bill,
right? That's right. So it's not really your ability to pay; it's more about how you pay.
Right. Your willingness
to pay. That's
what
how you prioritize.
So when you talk about people's ability, when they're looking at their credit and stuff, I mean, this is one of those things where when you hear people, because I deal with this a lot too, say, well, I don't use credit, right? They have a low credit. Which
how do you live these days?
Right. Which, by the way, I mean, that's great. You know what I mean? Like, you don't have credit cards, you don't have debt. Like, that's fantastic. Yeah. That's a good way to be. But it does play a role. Like, when you make decisions, when companies make decisions based on, whether to lend you money or whether to provide a service to you, right? Yeah. That requires payment on a monthly basis. It's something that they consider. Now, I remember we used to, and I think it may have changed, you can tell me, but used to, if somebody, like, let's say, for example, they had a divorce, right? And their credit was wrecked because this happens all the time.
Sure.
Because their spouse didn't pay or ex-spouse didn't pay whatever credit card bill or whatever. Used to, you could factor in for that. Can you still do
can?
that?
Yeah,
okay.
Absolutely. There's a credit dispute process. So if you've been through a divorce, or if you've lost a child, or you've lost a spouse, you involuntarily lost your job with the coronavirus. We've had a lot of people that lost their job. They didn't, no doing of their own. They just their business shut down, and so they lost their job. If you have those circumstances and that it was a direct impact on your credit, then absolutely there's an appeal process. There's a 3-page application that we fill out, send it into underwriting. They'll look at every individual case, and absolutely they make exceptions. So if that becomes a situation, we can always help you with that. Just because something happened that was out of your control, call us, let us talk about it, and don't shy away from it. Just be honest, open, and tell us what's going on, and see if we can help you, because a lot of those circumstances can be taken care of.
You can correct it on your side.
Yep.
Now, just to give and I know I'm putting you on the spot a little bit, so you can ballpark us here, but so I always tell people, whether you're buying a $200,000 house or a $400,000 house, your insurance premium on a monthly basis is going to be somewhere around $200 a month. It could be 175, it could be 225, it could be somewhere in that range. But it's not going to be $25 unless maybe it's a brand new home, or it's not going to be 500. So, you can shop and do different stuff in that range. But when it comes specifically to the credit part, so when someone has, let's call it bad credit versus someone, and by the way, they don't pull like a hard inquiry, right?
No, that's right.
It's just a soft
just
thing.
like you get a pre-approved letter in the mail from a credit card company. They're pulling some type of system that's going to give them a score to qualify you that way.
Right. So you're
same situation. It's going to be a soft hit, not a hard hit. It's not going to affect your mortgage. It's not going to affect you purchasing a house.
It won't show up anywhere.
That's correct. It shows up as an inquiry, not a pull.
So for someone that has, say, not the greatest credit, and someone that has really good credit, and all other factors being considered equal, what would you say the difference in a premium could be on a monthly or yearly basis?
Huge.
Pretty big.
For the Allstate scoring system is a 1 to 50 scoring system.
Okay.
The difference between a 1 to 50 is a large amount.
Okay.
I'm going to tell you, most of your people that are in the 50 range are probably not going to be qualifying to purchase a house.
Right.
So that's going to be a big factor. But somebody who has a credit score of over, I would say, a 30, a lot of those circumstances, like we talked about, there are circumstances that they have good credit, but they lost their job and it's affected their credit. We can work through those processes and get you taken care of. But it is a big difference. Credit is a big factor when it comes to insurance pricing.
And pretty much
home, it doesn't matter.
Right. But pretty much across the board too, all insurance companies do this now. This isn't.
There are some that are more stringent with it, and some that are less. But yes, in most cases, all insurance companies are using some type of a scoring system on your responsibility.
So something that you tell me all the time, and you just said it a minute ago, is that you really can't control rates, right?
Nobody can control rates.
The premiums are what they are. So when you look at different companies,
wait a minute. Progressive, you can name your price,
right?
But they can't control the price.
Right.
That just means you get less coverage.
Yes. Okay. So that's kind of where I was going with this. So when you look at different companies, we won't name the other ones, but you're Allstate, so you have other companies that you compete against. Really and truly, like when it comes down to when you're seeing big differences in rates, obviously some companies have different premiums, but they're really not that big of a difference.
Right.
But when you see a dramatic difference between, say, something that you would offer somebody and something someone else would offer, and it's significantly different, that throws up some red flags for you, right?
It typically comes down to deductibles.
Right.
What we see in the industry a lot is I quote people how I would purchase insurance, right? So when I start out, I put all the endorsements on there that I would want on my policy.
Right.
I do a deductible that I know that I can afford, that when it comes time to a claim, I'm not saying, well, who's going to help me here because I can't afford my deductible, right? And what we see a lot of times is when people quote price, they're quoting higher deductibles. Instead of having a 1% deductible on your roof, you're getting a 2%, maybe a 3% deductible on your roof. People don't look at the fine details. They just look at the price and say, oh, that's cheap. This is the one I want, right? So when it comes time to get that roof replaced, and you have a $6,000 to $8,000 deductible compared to a $2,500 deductible, that plays a big factor in your price.
So talk to 29 or 30-year-old Mike when he says, you say deductible, and I'm like, oh, okay, cool. But I don't really know what that means.
Yeah,
so what is that exactly?
With the inflation that we're experiencing today, the values of homes are exponentially going up, and especially the replacement cost. So what we used to be able to rebuild for $200,000 is now costing us $300,000 to rebuild. So that plays a big factor in 1, your premium, and then 2, your deductible. So your deductible is based off your dwelling coverage, not the claim. A lot of people say 1%. Oh, well, if I have a $10,000 claim, you're telling me I've got a $100 deductible? No, that's not the case. It's 1% of your dwelling coverage. So if we have a $500,000 house, we have a $5,000 deductible. If you have a 2% deductible, you've got a $10,000 deductible, and now you're covering the cost of your roof.
Right.
The insurance company's, covering a fraction of your roof, so absolutely they'll give you a cheaper price.
Sure.
In your premium, typically here in the DFW Metroplex, 65 to 67% of your rate is going to come from your roof.
Right.
So if you have
so many roof claims.
Absolutely.
Right.
We have a hailstorm every year.
Right.
Does it hit Mansfield? Does it hit Collin County? Does it hit Denton County? It's going to hit DFW sometime, right? Every year. But when it comes down to the age and the condition of your roof, it's a major factor in your premium. So when we're paying out 67% of your rate towards roofs, you bet that's going to be the biggest factor that they're going to take into pricing insurance.
And the deductible is actually money you come out of pocket.
By state law, you're supposed to, yes. So when you have a claim and your roof is, let's do some easy numbers. You got a $10,000 roof. You've got depreciation of, let's call it 3%. And a lot of people don't understand the depreciation. Depreciation is simply, your roof is not brand new. It is old, just like a car. As it gets older, it depreciates. Your roof, as it gets older, it depreciates. And so as your roof depreciates, they're going to take that out of your claim. Okay, if you have a replacement cost policy, at the end of the process, when you replace your roof, they're giving your depreciation back to you. It's called recoverable depreciation. If you purchase a policy that does not have recoverable depreciation, it's called an actual cash value policy. And if you have an actual cash value policy, now you have let's call it a $2,000 deductible at 1% on a $200,000 house, plus the $2,000 of depreciation. On a $10,000 roof, you're getting a $6,000 check and you're coming out of pocket for the rest.
Gotcha.
On a replacement cost policy, you're going to come out of pocket your deductible, and then after you put the roof on, the insurance company is going to reimburse you the depreciation.
Oh, okay, so that's a better, which is more
you
expensive.
Want a replacement cost policy, it's going to cost you more, but once again, that's the fine details. When you're buying a policy and one company's quoting you $2,000 and one company's quoting you $1,700, the one company has the 1% deductible and the other one has a 2% with a non-recoverable depreciation policy. You're not getting apples to apples, but that salesperson's not going to tell you that. They're going to tell you my price is $1,700.
And you have no idea until you actually have a claim, and then that's
you have no idea. And then you're calling Brad saying, "Hey, Brad, can you explain this to me because my agent won't answer my call?"
Well, okay, so that's another good segue into what I was going to ask you next is, and we'll just use, since you brought them up, we'll use Progressive, right, as an example. The Name Your Price tool. They have great commercials.
Flow's cute.
I love the commercials, but. Okay, so when you look at the models of insurance, the company, how they put together, I call it like an agent model or a call center model.
It's called direct.
Right, direct. So what would you say, obviously, look, he's an agent, he works in an agent model, so he's gonna have a bias towards that, okay? We'll get that out of the way. But that being said, what would you say are the biggest differences and why, because I tell people all the time, it's important to use an agent-based model simply because you can pick up the phone and call them. And, if you got to call most of them. If you're going to call Progressive, you're going to have to, sit there on the phone tree for 45 minutes until you get to somebody who has no idea, and you're going to have to repeat your policy number and all this other stuff 100 times. So
I'm going to say the biggest difference is advice. If you want to be able to call your agent, have a conversation and say, hey, I've got some situations that I want to talk about. Can we discuss this? Absolutely. That's what an agent's there for. If you have an 800 number and you call them up and say, I've got some situations, I need some advice, they're going to tell you, well, let's file a claim and then you can talk to the adjuster. And once you file that claim, it's on your record. It's a permanent record. It doesn't go away. They can't take it away.
It's going on your permanent record.
It's not going away. It follows you for anywhere from 3 to 5 years, depending upon the underwriting at whatever company you go to. Some of them use a 3-year history. Some of them use a 5-year history. So once you file that claim, it's on your history. If it's a zero, sometimes what it really comes down to is if you can qualify.
I got you.
Right? If you have 3 inquiries with a company and they put 3 claims on your record and you go to shop your insurance, you're not going anywhere. Even if they didn't pay you a penny, you're stuck with what you've got because you have 3 claims on your record. So the biggest factor when you look at a direct model compared to an agent model is the fact that you can pick up the phone. Typically, agents have great staff. They're knowledgeable. You can call them up. You can ask them questions. They can answer your questions. And you can determine whether you want to file that claim or not, right? You've got a deductible, and let's call it a $5,000 deductible, and you've got a $7,500 claim. You've got discounts for claim-free discounts and things like that are going to be penalized depending upon the type of claim. If it's weather-related claim, they can't affect your premium whatsoever. It's state law. But if you have a water claim or your dog bit somebody or somebody came in your house and they slipped and fell down and their doctor bills or whatever, we can walk through those processes and say, this is when it's time to file a claim and this is probably not best use of your insurance policy at this time. So to me, a direct model is it's there for the consumer that doesn't care for advice and just wants to buy a product. But if you want advice and you want somebody who's going to back the policy up and be there and be available to you, I give my cell phone number out to my customers for one reason, and that's because if you can't be available to your customers, you're no good to them.
Right.
It may disrupt my family time here and there.
Sure.
It may disrupt a basketball game or a volleyball game or a soccer game, whatever it may be. But you know what? If I can't promise my customers I'm going to be there for them, I'm no good to them.
Right. Right. And there's, people take value in the fact that, you're there to help them. And by the way, too, you were talking about whether or not it makes sense to file the claim or not. I think the confusion sometimes with that is like, oh, well, of course, the insurance company doesn't want me to file a claim because they have to pay for it.
Sure.
And there is certainly a part to that, I'm sure, in some cases. But, with Brad, when he tells you that, it's more about the math, right? It's more about...
It always comes down to math.
Right. It's like, here's what you're going to pay, but here's what it's going to affect to you. So it's up to you. I mean, you give them this, like, look, you can do whatever you want to do, but if you file the claim, this is what's going to happen. If you don't, this is what's going to happen.
And, the contractors are also the way they price their things are two different ways, right? You always have cash price. So you call up a contractor and say, hey, I have no insurance. I'm not going through my insurance company. What will it cost me to have this done? They're going to give you one price. But when it comes down to insurance pricing, the insurance industry really controls the pricing on what they pay out on a claim because they have software programs that are going to say, if you need a new roof, this is how much it costs. Right? Now, that can be adjusted by supplementing and other processes, but for the most part, it's all controlled on how much is paid. So, yes, we're always going to walk you through what's best for you, and that math is very simple. Your deductible, your discounts, and what does it cost you to get the repairs made?
Right.
And so those claims will stay with you for about a 3 to 5 year period like we talked about, and we'll do the math of here's how much your deductible is, here's how much you're losing in discounts, and here's what your out-of-pocket expense is today, and let you make that decision on what you want to do.
Okay. So when someone calls you and says, okay, I needed to file a claim, let's just talk about roofs or homes in general. What would you say and let's say it's not you. Let's say they have it with some other company and they call somebody else. What are some questions that they need to ask and things that they need to talk to their agent or the call center person or present to them to help them make their claim a little bit better and make sure that they're needing to do it and it's necessary?
The first thing whenever you file a claim is always a date and a time. So they want to know the date and the time and exactly what happened. Okay. Wind damage and hail damage are basically the same thing, but they are not the same thing. Okay. So wind and hail is always typically for your roof. We get a storm that comes through. We get 90 mile an hour winds with hail. Wind is going to damage your roof differently than hail is, and they're going to pay how they repair that differently as well.
Okay.
So wind damage is paid by the shingle. Hail damage is paid by a square. So they're going to mark off a square. They're going to see how many strikes you have in the square. And if you have a certain number of strikes, that entire slope is now totaled.
Gotcha.
In a wind damage situation, whatever shingles get damaged by that wind are the only shingles that are going to get repaired. They're not going to see how much wind damage you have and replace the whole slope. They're just going to replace those damaged shingles.
Okay. Now, what about other parts other than the roof? I know, we had a big windstorm recently, or the last couple months. And we were building our fence and my whole fence came down because of the wind. Right. Now, it was a small section. It wasn't enough to make a claim. We had somebody repairing it. But what are some of the other things that people need to look for when they either have hailstorms or wind that other than just the roof?
Yeah, so there are coverages on your policy that are going to be depreciated no matter what. Okay. Your fence is one of those, right? When you have a fence that's built to last 10 to 15 years, when the fence is 10 years old, we're not paying for a brand new fence, right? We're going to pay you a depreciated value minus your deductible. So once again, when you call the agent and you say, my fence blew over in the windstorm last night, what should I do? We're going to look at it and say, well, how old is your fence? Yeah. Was it falling over to begin with, and the wind just kind of knocked it over, or was it a brand new fence and it got blown over?
Yeah.
So when it comes to the fences like that, now as far as car and other types of damage, once again, date and time, they're going to want to know what happened. They're always going to want to take a statement from you. And so you've got to be available to the company to be able to let them process the claim and fix your repairs, work with your contractor. And that's really your duty as an insured. When you buy an insurance policy, you're in the contract, it states at the time of the loss, you're going to cooperate with the insurance company. Mm-hmm. If you do not cooperate with the insurance company, they will not pay.
Right.
So it's always important that you be available for them to work with you. Claims adjusters are very difficult to contact, right? They are on the phone 24/7 all day long, right? They don't sit by the phone waiting for you to call.
Right.
Once they leave you a message, they're on to the next call.
Right.
And so Playing phone tag with that adjuster can be a little difficult, and going back to having an agent or being direct, that's another situation where if you have a conflict getting a hold of an adjuster, you can always pick up the phone and call your agent and say, hey, I'm having a real hard time getting a hold of this adjuster. Can you help me with that? And we can absolutely get involved and help you with that.
Got it. Do you think that, and of course this doesn't happen with you, but when it comes to adjusters coming out, or when it comes to somebody showing up to look at your roof and they say, no, your roof looks fine. You don't need to make any claims. Should you always take that?
Absolutely not.
Okay.
Well, I'm going to tell you, the process of claims have changed in the last few years with technology.
Okay.
Virtual Assist is a big platform that the insurance companies use, which means that a live adjuster doesn't always come to the house anymore. They come out with a third party. They have cameras. They have video. They can Skype or chat with an adjuster behind a desk. And so the person who's at your property is not really the one.
Schmo.
They're just doing a process for a company. So they come out there and they take pictures, and what your contractor and what that desk adjuster, as I call them, look at for damage is not always the same, right? Behind a camera, you can't see what you can see.
Yeah, it's different.
And so if they come out there and they say, you know what we're seeing here is not damage, you always have the right to go back to your insurance company and say, I'd like a second opinion, and I'd like you to send an adjuster to my house. And when they send an adjuster to your house, I would tell you 90% of the time, they have a different opinion because they can physically see it, they can feel it, they can touch it. And now we have a better view of what we got. Now, if we have a baseball, golf ball size hill, Virtual Assist is a great platform. It gets to the customer quick, it gets a check in their hand quick, and it gets the process going quickly. But when we have a pea to marble size storm, not always do they see that damage through the camera or through a video, and so they need to send a person out to come see that damage, because 90% of your policies here in Texas on a composition roof cover cosmetic damage. On a metal roof, cosmetic damage most of the time is not covered. And so most of the damage on roofs is really cosmetic damage. Your roof's not leaking, your roof's still functioning, it's shedding water. But when it damages that shingle to the point where it will degranulate and it will deteriorate over time, that is still considered damage that is owed by the insurance company.
Well, because eventually that shingle can wear
100%.
You can get wear and tear.
It speeds that process up when they get dinged.
So for my agent friends out there that watch this, the tens and tens of people, what would you say, when you have a client buying a new house? I think some agents do a really good job of making sure the roof's in good shape and they have questions about it, but I don't think a lot of them do either, because they just don't think about it. So what would you tell an agent or, to guide their buyers on when they're buying a new home?
Buyers or sellers. I think one of the very first processes that you should take your customer through is not only inspection, because an inspection, they're going to look at your roof, but they're not a professional roofer, right? They're not going to look at damage. They're going to look at functionality, right? When they're checking the boxes, it says, does the roof function? Yes, it's shedding water. But they're not going to look and see if it's got wind damage or hail damage, or if nails are backing out of the roof. So I always recommend that they contact their, contact a refer, have a great referral for them, let them come out. I would tell you all roofers do free inspections, right? That's how they get their work, right? If they're charging you to come out, call the next one, because there's plenty of them that don't. So you call roofer out, have them take a look. If you're selling your house and you don't know you've got damage, it's much easier for you to take care of it now, deal with your insurance company, than you get a buyer, the buyer to have to go through this process, and the buyer find another property in the process and leave you and go find somebody else because they've got a new roof maybe. If you're selling your house, have that guy out, come take a look. If you're buying a house, always have the roof inspected by a roofer, not an inspector. And that way you're getting a fair, non-biased opinion on what they have going on. Nobody wants to blow up a deal, right? Roofs can always blow up deals. Nobody wants to blow up a deal, but we also want to protect our buyers. We want to protect our sellers. Look, sellers have responsibility. If they had a hail damage and they don't take care of it, they're still responsible for it, right? I've had multiple situations where a customer's bought a house, it fails inspection, we call the seller, we deal with the seller's insurance company, they come out, they take care of the roof after the property's already sold, because that damage is still their damage when they were insured. That's right. And so you can always work through those circumstances, but it's always best to do it up front. That way you're not dealing with it on the back end, because it always becomes a hassle on the back end.
Well, and I think, in today's market too, I think, somebody said, well, I'm selling my house, I've got 30 offers that are coming in, it's not going to be a big deal. They'll deal with whatever they deal with. And to some extent that may be true, but what also happens is you get your house under contract as a seller with a buyer, and then the buyer gets a home inspection, And then the buyer comes back and says, okay, well, now I want these 5 things or these 10 things or these 20 things completed.
The insurance companies inspect too, right? So just because the inspector says this, when the insurance company comes out, they may have a list of things too. And if you don't take care of those things, you're not going to continue with that insurance policy.
Right. Well, and then your buyers come back and say, okay, we'll fix it, but we need to lower the price $10,000, or give us closing costs of $5,000 or whatever.
Concessions can be whatever you guys choose.
Right. So if you get out ahead of that before you get your house listed, because good, you can tell them, no, we're not going to do that, and have somebody else come in, but you're going to run into the similar problems over and over again unless somebody just comes in and pays cash and walks away. So for the most part, if you get that stuff handled ahead of time to make sure that all that stuff, all your ducks are in a row, then you don't have to worry about the inspections as they come through and having to reduce your price. And, because then that 10 or 20% that you just, you listed your house for 300 and you got offers for 320 and you took that offer, well, now you just lost 10 grand or 15 grand off that offer that you could have had if you'd have just handled the roof situation before you got into it.
Very well.
So it's one of those things you just got to make sure that, you pay attention to and don't let it, bog down the transaction, because you just want to get through it and get out of it. Everybody just wants to get the house sold and move on and not have to deal with it. So, curious, have you had any interesting claim scenarios over the years that?
Oh gosh, any that come to mind right this minute? Not really, but anytime you're in the insurance business, you're going to come across. I've been here 22 years. You're going to come across your fair share of off-the-wall situations.
Right.
People think, well, I have an insurance policy; it covers everything.
Right.
Not the case. Your policy does not cover everything. There are exclusions in every policy, and so there are things that they're not going to cover. But as you your normal stuff, your fire, your hail, your wind, your water, thefts, those things should be covered by every policy. If you're buying policies that don't cover those things, then you got problems.
Right. And if you have, and again, the great thing about Brad, and the reason I really, use Brad, and just by the way, in all disclosure, Brad does not have my personal insurance. I don't have it with him, and I think we have our rental properties with him.
You do. That's
but my personal house I have with my college roommate and good friend of mine for years, but Brad helps me with a lot of other pieces to this because he's local, he's here where I'm at, and a lot of the clients that we deal with are kind of in the same area. And so I use him as a resource all the time. And I always encourage people, even if, I'll tell them like, look, you love farmers, like you or State Farm or whoever, like that's your favorite, fine. You've been with them for 20 years, no problem. Just call and just ask a question, because you're asking me stuff that I don't have answers to, and you can't get Progressive on the phone or you can't get anybody to call. So just call and talk to him and he'll help you out, because Brad does things not because he's trying to make money. I mean, obviously we work, that's the goal. We have businesses, we're not doing things for free. But at the end of the day, like we said in the very beginning, it really comes down to just taking care of people and being a service to them, because, if you do that and your heart's in the right place, business comes its way.
Absolutely. Karma's great.
So, well, I really appreciate you sitting down for a few minutes. I know, again, insurance is just a fiery topic that everybody likes to discuss.
Everybody loves insurance,
right? But nobody cares about it until
That's right.
until something happens, right? What is it? Chris Rock's bit. I need insurance in case shit happens. What happens?
And trust me, shit does happen.
Shit happens. So, if you guys have any questions about this kind of stuff, especially agents. These guys, your insurance guys, your roofers, they're really good resources when you're listing your house to reach out to and ask questions, kind of help prepare your sellers. And it's one extra level because it's a competitive market right now for listings. So it's one extra level of service that you can offer to your clients when you get in there to say, hey, let's look at your roof. Let's look at the property. Let's make sure our house is insurable so we don't run into issues once we get a contract accepted. So these are all little tools that you want to have in your tool belt and people that you want to have direct contact with, because if you have a friend of yours that's an agent or a roofer or something like that, and you call them with a question that isn't related to buying a policy and they don't call you back, probably not the best person to have on your side, right? So give guys like Brad a call, because they're going to be able to walk you through the process, help you understand what to look for, what not to look for, especially in a world that that people just don't deal with every day. And that's really what it is. I mean, most of my business and your business is all based on information, right? How much information do you have about the particular topic? And And the reason that we have jobs is because people don't really understand this kind of stuff because they don't deal with it every day. Because they're driving the bus, or they're working as a teacher, or they're working at Lockheed building weapons or whatever. Like this is what their job is. So this is what we do. And like we said in the beginning, we're just here to help and answer questions and make sure that you guys know exactly what you're getting into, regardless of if it leads to a deal for us or not.
Yeah. And for the agents out there, I know you call Mike all hours of the day.
Yeah.
Don't feel like if you've got an emergency after hours on the weekend, you're showing this house and you've got a question, call Mike. He's got my cell phone.
Yeah.
He'll give it to you. I'll answer your call. If not, shoot me a text message, and I can help you out in those situations where it's after hours and you don't have anybody to talk to. Give me a shout.
Yeah. So thanks, brother. Appreciate you coming.
You bet. Thanks
And
for having
if
me.
you guys have any questions, give us a shout. We'll see you later.
Have a great day.